X and Y are partners sharing profits in the ratio of 3:2. Their capital accounts stood at rupees 5 lakhs and 4 lakhs respectively after all adjustments regarding drawings and net profit for the year ended 31st March 2026. It was subsequently noticed that the following items were not taken into account while arriving at the distributable profit. Interest on capital at 6% per annum, interest on drawings at 6% per annum. Drawings were X 20,000 rupees drawn at the end of each quarter, Y 30,000 rupees drawn at the end of each half year. Additional data: the profit for the year already adjusted amounted to rupees 2,50,000. Pass the necessary rectifying journal entries and show the adjusted capital accounts of partners. Okay, so the two major requirements of this question is we have to prepare multiple rectifying journal entries. So please understand, this is a past adjustment question, but we are not going to prepare any past adjustment table as such and give like final capital to capital entry. This is rectifying journal entries. So we have to use P&L adjustment ledger, and then finally you prepare an updated capital accounts also. So let me write down the first step. Working note number 1. I have to find out, compute the opening capitals of partner. Compute opening capitals of the partner. This I can do either way. I can use a tabular column method or I can use a ledger method. I am comfortable with the ledger, so I will use a partner's capital account to come up with the opening capital. Particulars: capital of X, capital of Y. So the first thing is we have the closing balance. The question says that after all adjustment, the closing balance turned out to be 5 lakhs and 4 lakhs at the end of the period. Okay, 5 lakhs and 4 lakhs. The second thing is the capital account also considered the drawings amount. X withdrew 20,000 at the end of each quarter, therefore the annual drawings of X would have been 80,000 and the annual drawing of Y will be 60,000 because he withdrew 30,000 twice a year at the end of each half year, therefore 60,000 will be his drawings. Okay, I don't know what is the opening capital, so I leave it open, but the question said that this 5 lakh had been arrived after considering the drawings and net profit, distribution of net profit. Therefore, I will write P&L account or P&L appropriation account. They ignored all the interest on capital and interest on drawing and directly took net profit itself as divisible profit. So 2,50,000, X would have gotten 3/5 of it, and 2,50,000, Y would have gotten 2/5 of it. Now let us find out what is the original opening balances of each partner. ₹4,30,000 and 3,60,000 rupees. This is the opening capital. So the understanding is at the end of the year, this is how they would have prepared their capital accounts. The opening capital was 430, 360. They added the net profit itself as divisible profit. They missed out interest on capital and they also missed out interest on drawings. So these got missed out and the final balances somehow came up. So now we have to, that's what we are rectifying. So step number 1, we found out what is opening capitals. Now from this, let us go to step number 2. What is interest on capitals? Now the capital of X and capital of Y. Opening capital of X is 4,30,000 and the opening capital of Y is 3,60,000. What is the rate of interest on capital? 6% per annum. Therefore, interest on capitals is 6% of 4,30,000 and 6% of 3,60,000. This is the opening capital. Now, the question says that prepare rectifying journal entries. So let us directly put this into a journal entry. Adjustment entries. Adjustment entries. First entry, P&L adjustment account debit to partners capital account. Had it been normal situation, the entry would have been interest on capital account debit to partners capital, but we are doing it like a post facto, so it's like a rectification. So you don't bring interest on capital, rather you bring P&L adjustment itself. So profit and loss adjustment account, I'm distributing an expense and giving it to partner, so I will debit P&L adjustment here to X's capital account to Y's capital account. 25,800, 21,600. Therefore, the total debit of P&L adjustment is 47,400. So let this be one side. So first adjustment entry we have completed. Now let us go to the second working note, or the third working note, second appropriation, interest on drawings. Let us understand, first of all, compute the total drawings of both persons. Total drawings of X will be how much? It will be 20,000 at the end of each year, so it is 80,000, and Y is 30,000 at the end of each half year, therefore this will be 60,000. Okay, now I have total drawings. How to compute the interest on drawings? Let me do it. First, interest on drawings of X. X has withdrawn at the end of each quarter, therefore the average period will be 4.5. okay, so 4.5 by 12. So the computation will be written like this: 80,000 multiplied by how much percentage we have interest on drawing? 6%. 6 by 100 multiplied by 4.5 by 12. So if I just put that as a computation, the interest on drawings for X is 1,800 rupees. 80,000 for 6% for 4.5 months average period. That is interest on drawings of X. Now let us compute the interest on drawings of Y. Please understand, X has a standard drawing period, like at the end of each quarter. So you must have already memorized the average period for beginning of month, middle of month, end of month, and beginning of quarter, middle of quarter, end of quarter. So these 6 scenarios we can directly do average period from our memory. But this is for Y drawn at the end of each half year. So you may not be readily remembering an average period for this type of drawing. So we can actually find out it by ourselves. So in case you are stuck with average period, to find out what is average period, you have a shortcut formula for it. Outstanding months from the date of first drawings plus outstanding months from the date of last drawings, and that divided by 2. So just add those two and divided by 2. So simple. At the end of first half year, what is the first half year? First half year will be 30th September 2025. This is the end of first half year. And what is the second half year? End of second half year, 31st March 2026. That means X would have made his first drawings on 30th September 25 and second drawings on 31st March 2026. Now, from 30th September till the year end, how many months are left? 6 months are left. Okay. From 31st March 2026 till 31st March 2026, how many months are left? 0 months are left, because it's drawn on the last day of the year. Therefore, the total drawing period is 6, and you divide it by 2, you get an average period of 3 months. So the average period computation is 3 months here. Now let us substitute this computation here. Total drawings is 60,000 for Y multiplied by, again, 6 by 100 multiplied by, we just found out the average period to be 3 months. Therefore, let us give this in computation. 60,000 into 6% rate of interest into 3 divided by 12. You have 9%, 900 rupees interest on drawings. Now that we have computed interest on drawings, let us substitute this and write the actual adjustment entries. Here partners are not given money, they are taken money from, because this is interest on drawings, we are charging money from them. So X is capital debit, Y is capital debit to profit and loss adjustment account. If you recall, interest on capital is an expense for the firm, so we have debited the P&L adjustment. Interest on drawings is an income for the firm, therefore we have credited the adjustment account, P&L adjustment account. Please understand the distinction. So 1,800 and 900, totally the firm now gets an extra amount of 2,700. Right, now this P&L adjustment debit has created in a loss for the firm, a new loss for the firm. This P&L adjustment credit has created a new gain for the firm. Okay, so this is a new loss for the firm, this is a new gain for the firm. Now if you have to offset both of this and find out the new resulting divisible loss or resulting divisible profit. Let me quickly show. Let's say if this is P&L adjustment account, what happened first? There is a debit of P&L adjustment for how much? 47,400. Now there is a credit of how much? 2,700. Now you have to subtract E from E, 2,700 from 47,400, and you have to arrive at something called 44,700. What is the name for this? This is the new divisible loss. This is the resulting divisible loss because of this adjustment. Now this divisible loss belongs to whom? It belongs to partners only. Therefore the third entry will also be partners debit to P&L adjustment. I'm closing this P&L adjustment account. So partners debit and firm credit, P&L adjustment credit. How much partners should be debited? How much ever is the loss? 47,400 minus 2,700. 47,400 minus 2,700. 44,700. This loss will be distributed in the ratio of 3:2. Therefore 3/5 and 2/5. So this is the resulting divisible loss. Now we have completed the first part of the solution. Please understand, the question said that pass adjustment journal entries and also pass the adjusted capital account. We have done the first part. We started with opening capital computation. We got our opening capital. From opening capital we found the interest on capital. We passed the journal entry for that, and we also found total drawings. From total drawings we found average period, and then we also found interest on drawings. From interest on drawings we wrote the second adjustment entry also. New loss, new gains, two things arose, and then we net both of them. After netting both of them we got a new divisible loss. That loss also we have distributed to partners capital. Now let us prepare the final partners capital, adjusted partners capital. After all the rectification, how does this capital account going to look like? So opening balance of the capital account is not going to change. This is going to be constant. So 4,30,000 and 3,60,000. There is no change going to be changed in this opening capital, but we have to start with the first profit and loss adjustment account. We did this entry, right? First entry, interest on capital. We credited the partners, isn't it? So that part I'm writing here. This is the ledger accounting part of that. X gets 25,800, 21,600. This is the first adjustment. Second adjustment, we have to write the original drawings account. That is not going to be changed, 80,000 and 60,000. But the next thing is we have to write the other adjustment, interest on drawings. Interest on drawings 1,800 and 900. So we transferred the interest on capital adjustment as well as interest on drawing adjustment, and then we will bring the original net profit transfer. We will retain that is not going anywhere, so we will retain that itself, and then the final adjustment, we have passed this entry, isn't it? So the divisible loss, net loss, so that we have to write one more time. Just it is called the new divisible loss, 26,820 and 17,880, right? So we have passed all the necessary adjustments, necessary rectifications inside capital account. So let us take out the totals. The credit side of X and Y happened to be 6,05,800, 4,81,600. Let us see what is it for the debit side. Of course, the credit side happens to be higher. So let us paste that amount on both sides. So we will get a new balance carried on. 4,97,180 and 4,02,820. Now let us quickly recall how to do this adjusted capital balance. First step is you have to find out these three entries. These three entries you should first fix, and then when you open the adjusted capital account, you have to retain the old capital account as it is. Retain the old capital account as it is. You see, you just have to remove balance carry down. Just remove balance carry down also. Apart from that, compare the opening capital working note. You see, whatever it is, drawings was there, opening balance was there, the original divisible profit was there. Retain all those three items as they are: opening balance, drawings, and original net profit. Just have them as they are, but just paste the other three items. The first rectification entry, the second rectification entry I have posted here, and then the third rectification entry, the resulting divisible loss, I have posted here. Once you do that, you get the final carry down balance, 4,97,180, 4,02,820. Let me quickly zoom out and show you what we have done thus far. Original capital, opening capital computation. From there we found out interest on capital. We did the rectification entry, interest on drawings, rectification entry, net these two entries, and write the final resulting divisible loss entry, and then we prepared the capital account, adjusted capital account. I hope this is clear to you. So I will see you in the next one. Thank you.